Good afternoon, everyone. My name is Nyan Koto, and I want to welcome you back to the Common Sense Investment Platform. Today, I will be discussing things that you need to do before you start investing in the stock market. As always, I am not a financial advisor, so if you're going to use any of the information in this video, please do your own research. To help out with the discussion today, I developed this PowerPoint document. Before you invest, the first thing that you need to do is you need to make sure if you are working and your employer has a retirement plan like 401k or 401b, invest in that first. Because when you contribute to a 401k or 401b plan, in most cases, your employer also contribute towards your retirement. So it is common sense for you to invest in your 401k retirement plan first, because it gives you a guaranteed return. And that guaranteed return comes through your employer giving you more money towards your retirement. Once that is done, go ahead and pay off all your credit card debt, especially if you have anything like $1,000, $2,000, $3,000, $5,000 or more in credit card debt. Pay those off first, because the interest rate on credit card debt is between 20 to 30%. So you don't want to take your money and invest it in the stock market to make 8 to 12% while you're paying someone else's 20 to 30%. This is common sense. The next thing is you want to also build 3 to 6 months of your monthly expense and put that money in a high yield saving account while it sit there and earn you a little higher interest just in case you need it. Because when you invest in the stock market, if the stock goes down and that's the only money that you have, you will be forced to sell. You do not want to do that. You need that safety net, so just in case you can go back to it instead of selling your stock. Once all of that is done, the next thing you want to do now is you want to go to Fidelity, open an account, just like we discussed in previous videos, and start investing consistently in a low-cost ETF like VOO and SCHD. If you buy VOO, for example, you are investing in the top 500 companies in the United States. If you do this consistently, using the method that we discussed in a previous video, you just set it up and forget about it. Let Fidelity go into your account and withdraw the money, do the investment for you every 2 weeks or even every month. Once you do that consistently, don't go back there and take a look. Let it be there for a very long time. Because to get successful in the stock market or to gain any significant financial benefit in the stock market, it takes time. It's not going to happen overnight. Because what happens is, once your initial investment start making money, then the money you make on your initial investment also will start making money. Little by little, you will start to see the difference. So do not invest and next month you see nothing happening. It's just a little bit of money you get and then you get frustrated and say, oh, this is not making me enough money, I'm going to leave. It doesn't happen overnight. Always remember from previous video that consistency, not panicking, and time in the market is what builds you financial freedom. Is what will get you to that financial freedom. Once you set your investment and forget about it while it is working for you, the next thing you need to do is you need to keep learning and improving your financial knowledge. Because if you know that your money are your employees, you need to send the dollars out there so that they can go out there and earn more money for you while you sleep. You do this for your employer all the time. You are out there earning money for them while they sleep. So when they give you that dollar, you go ahead and put it in the stock market and also let that money earn some money for you. Because the last time in my other video, I told you guys that the tax laws in the United States, they are made to benefit people who start businesses and people who invest. And I will be discussing this topic next. So please watch my next video so that you will be able to understand why the rich in the United States pay less taxes than the working class. Thank you for watching. I'll see you next week.